I'm Charlotte McLeod with the Investing News Network, and here today with me is Maria Smirnova, Senior Portfolio Manager at Sprott Asset Management and Sub-Advisor to Ninepoint Partners. Thank you so much for being here today, Maria.
Thank you for inviting me to be here.
So let's get started with our questions. We're going to be starting off with gold. Overall, it's been a great year for gold. It's enjoyed major momentum. And to start off, I wanted to ask if you could go over what you see as gold's main drivers this year.
I think that's a good place to start. So of course, as many people know, gold and silver are both having a great year, among other metals. Gold is up 24% year to date to so the first 3 quarters of the year. And really, gold was rallying prior to this year as well. But this year, it has had a really breakout year. And the main catalyst, of course, unfortunately, has been the COVID pandemic. And the reason it has been a catalyst is because, you know, when we experienced the pandemic, and it all really happened in the Western world in March, and of course, in the Eastern world, it happened earlier, but for us, it happened really in March. You know, countries started shutting down their economies. This led to drops in economic activity, drops in employment, etc. Unfortunately, a lot of businesses closed. So the governments around the world really had to step in and provide both kind of injections of economic stimulus. So there was a lot of economic stimulus packages, and also central banks had to step in with monetary liquidity and cut interest rates and increase their balance sheets. And this happened, it's really been done on an unprecedented level. These are trillions of dollars we're talking about, not billions of dollars, many trillions. So basically, this has kind of been the catalyst for gold. And the reason for that is this increased liquidity, this government debasement of fiat currency put a spotlight on gold as an ultimate hard currency. You know, it's a hard asset that cannot be debased or devalued. So, you know, and another aspect of this is interest rates, of course, are low and have become lower and lower and lower. And real interest rates is what really drives gold. These have turned negative, particularly in the United States, and other countries too, but you know, the focus has always been on the United States. So negative real interest rates are really positive for gold, and that's what's, you know, that's what's been good. Also, the US dollar has been going down, you know, opposed to other currencies, and that's also helped gold.
Okay, well, thank you for that breakdown. It's obviously a very big and complicated picture. You know, while 2020 overall has been good for gold, we did see a pullback last week. It's continued into this week somewhat. Could you shed some light on what happened there and maybe how long we might expect this to continue?
So I would classify the pullback as a correction. As I always say, nothing goes up in a straight line. We've seen both the United States dollar and the real rates backing up, so increasing a little bit. And frankly, it's not been really big moves. We're not seeing big moves, but that has led to the precious metals selling off a bit. Also, we are seeing a second wave in many countries of COVID. You know, that's contributing to worries about global economy again. We're also talking about the US election that's coming up in about a month. And that's introducing volatility. And also what's happened is, you know, the US market has sold off, corrected a little bit here too. So as people sell stocks and gold, the US dollar is rising. And that's been just a correction. Now, the other thing we're not seeing is a new stimulus package. I think the market is expecting another a US stimulus package, and there's not been agreement on one. So we're kind of in a wait and see mode, I would say. And that's what's happening basically.
Okay, now what would you say is the long-term potential for gold during this cycle? You've talked a lot about some of the things that are going on. What are the catalysts we might watch as we move forward?
Well, you know, we as portfolio managers, we don't make predictions on the gold price. I'll just say that. I have seen projections from other analysts of $3,000 per ounce for gold, which is, you know, sounds like a high number, but I think it's completely, we can completely see that. And the reason I say that is because on an inflation adjusted basis, gold's all-time high is about 50% higher than current levels. So if you look back in the early 1980s, if we adjust the gold price back to that level, we're about 50, we have about 50% upside right now. So that actually coincides with that $3,000 gold. If we look, if we round today to 2,000, that's about 50%. So that's kind of how I look at it very simplistically. Again, we're not making these predictions, but I think ultimately we are in a very positive macro environment for gold. I think we can see the current situation persistent for many years, real rates being low or negative for many years, and the Fed has already announced that they will keep rates low for longer, and they will let inflation run hot or hotter that they've achieved so far. So again, that just goes back to, we still have a lot of runway for gold to go. And those are the catalysts, really. I would say, watch fiscal policy, watch monetary policy. What the central banks around the world will do going forward is very important. This will affect, again, I go back to the word real yields or interest rates adjusted for inflation and global liquidity. If we're seeing that banks and governments are injecting liquidity, that is positive for gold. Those are two very important factors. And then the third one, I would say, you can throw that in the mix, is geopolitical tensions or risk. And we've seen in the past, maybe not this year, but we've talked in the last couple of years about what's going on in the world geopolitically to contribute fuel to that fire and drive the gold price higher as well.
Okay, that's great. And I really appreciate the perspective on how you look at the price. I think that's really helpful. We have a lot of followers who are interested not just in gold, but also silver, which, like gold, has had quite a good year. What can you tell me about silver's performance in 2020?
Well, we at Sprott love silver. I think we are more bullish on silver right now and have been for a while than gold. And the reason is silver has a really kind of a tug and pull relationship with gold. Year to date, the silver price is up 30%. So far, that metal has already outperformed gold by about 6 percentage points. Now, it is more volatile than gold. It's a much smaller market. So I think the price moves more amplified both on the up and the down. In bull markets, which I think we're in one clearly, silver does outperform gold historically. So that's exactly what we're expecting. And also, silver is, so whereas gold is a purely monetary asset, silver has two heads to it. One is the monetary investment head, and the other side is the industrial demand side. And so I'm sure your readers know that, or viewers know that silver is used in solar panels, in automobiles, in all kinds of different applications. So I think also post-COVID, as the world recovers and as industrial activity recovers, that will actually help silver, because that industrial demand will also contribute to the supply-demand picture. However, in the meantime, in the first half of the year, I would say the greatest driver has been investment flows. We've seen tremendous inflows into the exchange-traded funds in silver, in gold as well, and that's all contributed to positive performance.
Okay. Now, this is a question I love asking people. What's the best way for investors to get exposure to gold and silver? There are so many options right now, from physical metals, stocks, you're talking about ETFs. What is your take there?
So as a disclaimer, I'm not a financial advisor, and as such, I'm not allowed to give financial advice. I always say that what you choose as your investment vehicle, first of all, talk to your financial advisor. And that depends on your personal financial situation. However, we manage actually at Sprott both equities and physical bullion. So what I will say, generally speaking, bullion is less volatile than stocks, as stocks provide financial leverage to the price of the metal. Whatever the metal is, you will have amplifications, you have operational risks on the company side, you have financial amplifications, because every dollar that the gold price goes up is generally going to the bottom line of the company. So it drives performance higher. So I would say also that year to date, equities have strongly outperformed the bullion. And that's exactly why, what I've just described, that's what's happened. So in terms of what people could use, I would recommend exchange traded funds. I think that's a great way to buy particularly bullion, because that provides you exposure to the metal, but you don't need to store the physical metal. You can just gain access to it at a small fee. And then on the other side, of course, we have great stock products. We have funds that invest in companies that mine gold and mine silver and explore for it. And what I'm happy to report is that on that end, we're seeing a resurgence in, there's capital available now to go into the ground, and companies now have more money to explore and find ounces. And I think going forward in the next few years, that will actually benefit the companies, because they'll start finding new deposits, hopefully add ounces to their balance sheets. And also, I think with the current gold and silver price, companies are now more profitable. So hopefully we're going to start seeing great earnings reports from companies, and that will drive performance. So again, I can't say for any one person what is best, but I think there's some great products, and Ninepoint Partners has some of these products for people to access for sure.
That's great. And that actually works well with one of the questions I had, which was, when you look at gold and silver stocks, where are you seeing potential opportunities right now? Juniors, mid-tiers, major minors? It sounds like there could be potential at each level depending on how things move forward.
Absolutely, yes. There's, in the last, I would say 5 to 10 years, the mining industry has really made effort to, I don't want to use the word reform, but really they've worked on their balance sheets. They've deleveraged their balance sheets. So that means they've reduced their debt. Again, the companies are more profitable. The margins are going up this year, right? And that means the companies have more money to put into the ground and put into their projects. Now, we at Sprott Asset, so when we're managing funds, our slant is definitely towards small to mid cap. And that is because we view that there's more opportunity at that level to create value. And again, that goes back to exploring and finding new deposits. That is the lifeblood of the industry, and that is what we focus on. We're focusing on companies and management teams that can find the future of the industry. And so that's kind of our slant. But in terms of the larger producers, we have a lot of producing companies in the portfolios, and I think that overall they're doing great, financially and operationally. And again, the industry has made a considerable effort in the last few years to put their operations on track in many ways.
Okay, and as we wrap up, one thing I've been hearing a lot of talk about lately is generalist investors entering the precious metals space this year. And I wanted to ask if that's something you're seeing too, and if so, how significant it is for the market to be seeing that influx of people who are fresh blood, I guess.
Well, this is a very interesting question, and obviously this is something we're watching at all times. We're hearing about generalist investors being interested, asking the questions, taking the meetings with companies, but I don't know how many actual flows we're seeing yet. I think right now it's mostly the generalists, and I think maybe mostly the specialists, but the generalists are kind of still dipping their toes in the water. They're very interested, but I don't know how much money has gone in it. And of course, with gold and silver space being relatively small on the economic kind of global scale, it doesn't take much for to move the stock prices, So if we really did see an influx of money, I think that the valuations would change dramatically up.
Okay, and just as we wrap up here, are there any final points that you would leave investors with as we head into Q4 after what's been definitely a very interesting year?
Yeah, certainly. I think we're excited about gold and silver's prospects. We've done studies which clearly demonstrate that a small addition of gold into a general portfolio of stocks and bonds, let's say 5 to 10% of gold, reduces volatility and increases overall returns long term. So no matter what your view is on right now in this point in time as to the outlook for gold, I think having a little bit of gold, again, 5 to 10% seems to be the magic number. Longer term will provide investors with a great diversifier. So again, I think when we, pitch the products, we don't try to say gold will go up, X in the next few years. I think our thesis doesn't rely on that. We believe in gold as a hard asset, but again, mathematically, it has been proven that over the long term is just a good diversifier and something good to have in any portfolio.
Okay, well, I think that's a great balanced perspective and a good note to end this on. So thank you so much for being here today. It was great to speak with you.
Thank you very much. Have a great day.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Maria Smirnova.